Hey guys, just a quick introduction about myself. My name is Anant. I've co-founded Zell Education, which is an edtech startup specializing in finance and accounts based out of Bombay. I've studied my chartered accountancy and company secretary, along with my bachelor's in financial markets from HR College in Mumbai. I get asked a lot of questions with the tens of thousands of students who study with us about what is the right investment portfolio, what should you start with, how do you begin. I'm going to create a series of webinars for you guys to ensure that you'll understand how do you get from 0 to 1. I used to do a program called the Ride of Investment, which I had approximately trained over 3,500, 4,000 students over 2 years to just understand how to begin investing. So the first rule of investing is you start. You don't wait. There's no better time than today. Every minute that you don't invest, you're losing money keeping it in your bank account. Now, why do you lose money by keeping it in your bank account or you're safe at home? While you can park your money in the bank account, it's going to give you a savings interest, which will be anywhere pre-tax less than 4%. Now, that's going to be a problem since money's value due to inflation is reducing anywhere between 6.5% to 7%. So essentially, by parking money in your bank account, you're losing about 3%. You need to start investing today. In the last 1.5 years, the markets have given overall, if I call it a Nifty, has given us a return of anywhere between 60 to 80%. Since the last 1.5 years, the markets have been on a bull run. Markets have exponentially given us returns, which have grown our money close to 55%. That means 100 rupees approximately in April 2020 is over 150 if you had invested in the Nifty 50. Now that's an exponential return which you normally don't get. If you think there's any better time to invest than today, you're essentially losing money by holding it in your bank account. Now, you might ask me, where should you put or park your money? There's equity, which is basically share markets across the world. You can go to the BSE, NSE and invest. There is commodity, which is one of the oldest forms of investment, which is gold, silver, copper. There are food grains also, which you can invest in. There is debt, which is basically bank FDs, which is bonds, debentures, etc., which give you a fixed amount of return every year. So you can invest in land, which is one of the oldest forms of investments, and something which has newly come up, something called crypto. Crypto is something which has given tremendous amount of returns in the last 5 to 7 years. Now, what should you look at when you start investing? One very important thing to understand is do not invest in something you have no idea about. For example, if you don't know how to do land deals or understand how the land structure works, I would suggest that you gather enough information before you put your hard-earned money. So a rule of thumb which I've followed since I've graduated from my bachelor's in financial markets is that 100 minus your age will give you the percentage of risk which you can take. What that means is if you're 25 years old, you can take 75% risk by putting in things which have a higher return, things like equity, things like crypto. It could be a very arbitrary rule, but you can obviously follow something you're comfortable with. I started investing back in 2014, and one of the few things I started investing were IPOs. IPOs made me a little bit more comfortable because they usually have something called gray market premium. And I can get an instant return if the premium is high. You can understand if the premium is high by going to many different websites like chittorgarh.com or speaking to analysts or speaking to people in the market. One of my favorite industries to invest was aviation. And when I looked at the aviation sector, one clear company came out. Now, how I had to dissect this a little bit back then, I had to look at a company which had less debt, which is very, very, very important for me. I don't like to invest in companies which have a high level of loans. I invested in companies which had a simplistic business model, a less frill model. What that meant is a company which didn't have to spend extra to grab a customer. For example, Jet Airways had to spend, or Kingfisher had to spend extra to get that one customer to sign up for them. They also charge a premium for that. The Indian market is such that we prefer a low cost approach, which made Indigo or Interglobe Aviation the obvious place to invest in. I subscribed to the IPO and I paid about 765 rupees per share. If I'm not wrong, the price today is north of 2,000. It took me 5 years, coming close to tripling my money. And that really, really helped me understand long-term investment and how a company can dominate. Now, when you look at Indigo as a company, or you look at aviation as a sector, first thing you look at, can everyone enter that sector? No. You need enormous amount of capital, plus government regulation, plus that expertise of running a company of that size. Indigo did one of the smartest things by not investing upfront to buy its aircrafts. It bought the aircrafts and it sold it to a bank and leased it back from them. That gave it enormous amount of working capital. Now, working capital, and also ensure that it doesn't accumulate too much debt on its balance sheet early in its career. Indigo also had the most amount of flights back then. Indigo also ensured timely deliveries. It kept a very simple basic model to ensure that its customers don't get aggravated. They fly on time and the cost to the customer is the cheapest. Now, in a country with an enormous population, Indigo uses to its advantage. If you look at the other companies in the same sector, which is Spice and Jet, they had a torrid time because they couldn't, and even Kingfisher for that matter, they couldn't manage its business model properly. And Indigo emerged as not a monopolistic, but a company which could hold over 50% of airspace in India. And it's given me enormous amount of returns. Second thing which I look at when I'm investing in the stock is who is running the company. The management. The management is the most important part of the company. They will make decisions if your company will help you generate enormous amount of returns or it will go down. What can you look at the management to determine their pedigree? You can look at what they've done in the past, what kind of decisions they've taken in the present to ensure the company comes to a stage where it's going to be listed in the stock markets. Or you can understand by reading their notes on where the company is going to the future. The management has to time and time again talk about the future of the company to its shareholders, who in essence are the investors, are the owners in the company. Now, this will give you an idea about what kind of industries to pick. Another simple way of checking how you can invest in the markets is what is going to happen in the next 20 years. When we started Zell, we looked at the demography of India. It's been 6 years since 2015 since we've started Zell. And what we did was we looked at the market. I had worked in pharma for 2 years, and I was looking and understanding how the education sector back then would shape. India had the youngest population in the world and also the largest population to see what's going to happen in the next 20 years. India will face a healthcare boom with more and more babies which might be born, and it will have the need to invest in education in most of them. Education being a primary need, we invested in Zell and we started this with 10,000 rupees. And today we can proudly say that after 6 years, we've trained on a yearly basis about 10,000 consumers, and we can place them in the best kind of companies. So it was a very simple line which could help me understand what's going to happen in the future, because you invest today for the future. You do not invest in the past of the company. There have been enough companies in the past who've done incredibly well, but they've not been agile and adaptive to the changing needs. And today, the world's changing very quickly. Another way of looking at it is invest in things which don't change. A company like a Parle-G, which is making biscuits, probably might not change probably might not need to change as quickly as an education technology company or a financial technology company, which will thereby reduce the cost of R&D, and you can invest the profits back to ensure sales grows. So this is a very simple way I've kept to explain how investment works. What I'm going to do is shoot a series of videos for you guys to help you understand how investment works. If you guys have any doubts, please put them in the comments channel below, and I'm happy to answer them or make a video if there's something which really catches on. it gives me great pleasure to tell you guys that we completed 6 years of Zell. It gets us to a landmark stage in our careers where we've been able to grow this company, survive in this ever-changing education environment, fight off competitors. And I would love to thank the people who we began this with, the people who've helped us throughout the journey. We've been incredibly lucky to start this with zero capital. We've had a great set of people we work with. We have an amazing set of faculties, and to our students and parents who have believed in us when, I wouldn't have believed in a company selling us a program. And, I'm very glad to tell you guys that we've crossed over 10,000 lifelong learners at Zell. And we're happy to keep adding this and making sure that we grow this into a massively successful company worldwide. So thank you so much, guys, for all the support you've given us throughout the years.